Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on Tuesday, the 23rd of August, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Now, by now, you probably recognize that, as I've been saying for the last few weeks, that the trade is fairly choppy and fairly tough. Um, but overall, the overnight news is not there isn't anything that's pushing us out of here. The big news this morning was the PMI numbers from Europe. German manufacturing slipped from 53.8 to 53.6 in August. Um, France, the service sector saw an improvement from 50 to 52 from 50.5, and of course we saw crude oil take a dip yesterday uh, due to releases by Goldman and I believe it was Morgan Stanley, stating that the rise in prices is simply based on an expectation that supplies would be curbed, but there's no sign on the horizon that that would be. There's talk of it, but nobody ever actually moves forward and gets that done. So we saw, and I talked about this in the pre-open, um, and we saw a pretty big move there. I'll cover that in a minute. Other than that, this morning there really isn't much on deck. The market environment is bullish. Capital is moving towards risk, sentiment's moving towards risk, with crude oil trading at 47.08 right now, traded as low as 46.62. The US dollar is also down 0.21% at 94.305. And then the 10-year Treasury note, and then everything else I track, the bond, the bund, the euro, the yen, the S&P, Dow, gold, NASDAQ, Russell, pound, the DAX, and the euro stocks are all up, with the DAX and the euro stocks up pretty strong. Euro stocks up 1.22 on those numbers. So that's how things have shaped up. As far as what has hit the wire since the PMI and the Eurozone numbers, not seeing much at all. Iran says it has confirmed that it will attend the OPEC meeting in September, um, and that's probably going to have crude moving around a little bit today again. As far as what we are expecting going forward, we're getting U.S. manufacturing PMI prelim at 50 at 8:45 Central, 9:45 Eastern. That's 15 minutes after the open. Expecting 52.7 for August. Then at 9 o'clock we get the Eurozone Consumer Confidence Advance. This can be a mover for August, expecting negative 7.7, negative 7.7. The prior is negative 7.9. And then at the same time, at 9 Central, 10 Eastern, we have U.S. new home sales expecting 580, and we're also getting a minor number at 9 o'clock. At the same time, the U.S. Richmond Fed, which usually comes out ahead of the others, and it gets out of the way quickly for August, expecting 6. As far as speakers, nothing's on deck that I can see right now. And as far as treasuries, we've got at 10:30 4-week bill auction for 55 billion, and we also have a noon central new 2-year note auction for 26 billion. That's pretty much it for news. Let's take a look at what we expected yesterday from yesterday. Here's yesterday's Trader Bite. I'm gonna just switch gears for a moment here. I want to be clear that it is not my goal to predict the market for you. It's not the intention of this broadcast. The intention of this broadcast is to create a framework and share that framework on a daily basis through habit and repetition, so that you can adapt it to whatever else you're doing to prepare for the day. Hopefully, you're coming into every single day with some sort of a plan. Now, I see comments here and there. Well, you said that last time. It didn't work. It's not working all summer. Hasn't worked since Brexit. But the idea here is that I'm following auction behavior. The market is not. And the market has the prerogative to not follow any behavior at all. And so, just like everything else, just like every approach to the market, there is a time and a cycle for every single market type or for every single plan. And I've been very explicit in saying that for the last 6, 7 weeks, the way the market has been trading, it is not creating a um, very clear rotations and very clear testing on the auction because it has gapped up and has been sitting against all-time highs for a long period of time. So I'm not making excuses here. I'm just setting expectations so that everyone who watches this knows that regardless of however you approach the market, whether you're using, you know, uh, Gartley or Fibs or Elliott wave or whatever, chart patterns, in the end, this market boils down to buyers and sellers um, uh, acting on their perception of prices being too cheap or too expensive, and that's what we call an auction. And so the goal here is to come in with some sort of a plan. If this does not work for you, I invite you to not watch. I think people get frustrated with days like yesterday where the market whips around very um, in a very strong way, and the idea is, well, you've covered both bases with hypo 1 and hypo 2, so you can say hypo 1 worked one day and hypo 2 worked the other day. But that's the idea. The idea is that I'm prepared for whatever eventuality comes out, except my hypos let me know what the potential targets, the potential turning points are, so that when that happens, I know how to act. And so that's what I want to make sure people understand. I think there's so much being sold online to people in this one red pill, blue pill idea of trading. Take this; it's going to solve all your problems. It's going to create, make you a ton of money. That they're expecting the same here. They're expecting to somehow look over my shoulder before the market even opens and to be able to just apply hypo 1 or apply hypo 2. We're not applying anything here. We're preparing for the day, but in the end, the market will do what it needs to do. And my goal is to be prepared for whatever that is and to align myself with it. Again, the goal is for me to prepare for whatever the market's going to throw at us for the day and to align myself with it, not apply apply what I believe onto the market, because that's what I see on a daily basis from online and retail traders, is that there's this idea that this should work because I did the homework, this should work, and therefore you better do it, Mr. Market. And that doesn't work. So if you want to trade professionally, if you want to trade at a consistent level, you need to look at the market as a natural force, like nature, like a hurricane or whatever, and you need to just be prepared to deal with whatever it throws at you. This is a lot like battle. Okay, so just now that we've gotten that out of the way, yesterday the expectation was, because we're opening in range against the point of control, we saw and I talked about a weak low in the overnight session and the likelihood of a low break of the overnight low, which was 75.50. The idea was I expected the market to almost immediately test that low, and then I expected a rotation to 21.81 and a quarter, and then all bets are off from there. So that's the primary idea. The secondary idea was the opposite, that the market will test higher first. If it does and it finds its sellers, it's likely to push way down. which for day traders is a better um, is a better trade. Really, it brings in volatility, it widens the range, it forces the buy and holders to actually do something on a swing basis. But that didn't work. We had a hypo one take place almost immediately. This is yesterday here. Remember, the overnight low was 75.50 right up here. You can see the market opened, went up about 2 ticks, and then we had an open rejection reverse. It rejected that direction, reversed. It had a driving force behind it. So you can see here in the delta that there's a fair amount of size hitting the bid, sellers hitting the bid, aggressive sellers, and it pushed right through that 75.50 almost immediately. It moved down to 73.50, just below, just 2 points below, and then it consolidated. What it did, though, that was tricky, was it set up this double bottom, which triggers the double bottom of the IB low, even though the IB is not built yet. It creates this double bottom statistic that we have that this is likely to break by the end of the session. Again, 83% is the likelihood. 83 of sessions tested um, end up breaking that double bottom at the IB low by the end of the session. Past performance is not indicative of future results, and as statistics go, you don't know when the next one is going to be a winner or loser. But in this case, it gave us a target, and so it set up this mid trade initially, and then it set it up again here at 76.50 for another rotation. And this looked like a really, really high probability that we would dip through and maybe test below the prior day's low before the rotation up to continue hypo 1. Remember, hypo 1, again, just as a refresher, looked like this. It looked like it was going to dip. It did dip into the overnight, but it looked like it might dip even deeper. And then it immediately rotated, and it completed hypo 1 right at the test of the point of control, 21.81 and a quarter, and then we got this rotation down after one tick test. Here's a one tick test to push the IB by one tick right there, and it immediately turned around and shot down. Now, notice this gap here in the shading. This was interesting. I commented on it in the S5 chat forum yesterday. That gap there is a 30-minute time slot. This was right after the IB was done. This was not during the lunch doldrums. This was not during right before a number that we're waiting for. For an entire 30-minute period, this market was able to form two-tick Renko bars. Two two-tick Renko bars in a 30-minute period during the most active part of the day. That's the kind of market we're in. And then we had an explosive move down. I announced the short here, ended up covering, and then it immediately fell. And the reason I covered is because I was looking for the one tick failed auction like it had here, but it ended up lingering. So it looked like it was an impulse flag and a continuation as time went on, and this consolidated and started building this high volume node up here. It became a lower and lower probability that this break was likely to happen, and it did. So that's just the kind of trading that has been present here for some time. It dropped, chop, whipsaw, chop, drop, whipsaw, chop again. There are no, drop, pullback, consolidation, continuation, pullback, correction, and then the corrective wave up, like the classic movement. It's up, down, and then it goes into a death spiral at the end of the day where there's nothing going on, and we end up with these really odd-shaped profiles like this one. Very sharp kurtosis on the point of control. Again, kurtosis below, and then we have another high volume node below. We have a high volume node below that. It looks like Jaws's teeth. And then yesterday, Here's a high volume node above. Here's some high kurtosis again, point of control, a minor high volume node, and then a big high volume node below. Kind of like the market giving us the finger there. It just doesn't. We don't see. If I scroll back, we don't see normal distribution profiles as much as we used to. We see a lot of, even this one that looks like a normal distribution is actually going like this, like that, down to an LVN, and then like that. It, what this is telling us, and it seems that way, it's telling us there's really no consensus on price. There is no taper in the top, taper at the bottom, with the bulk of trading happening in the middle, in that the market is agreeing on price. There's no consensus on price here. There's a lot of frantic buying or selling at a certain price. Then the market moves to another area. There's frantic buying and selling at that price, and then it moves again to the next area, and then more and more and more, as opposed to an orderly market that ultimately tests prices higher, builds, generally builds in the middle, tests prices higher, then tapers, because as prices go up, there's less and less interest. Buyers are shut off, sellers are activated, and then it moves back to the middle, and then tests down, and then moves back to the middle in a balanced fashion, where you end up with tapers at the top and the bottom, value area, and a point of control somewhere in the middle. We haven't seen that in quite some time. We see it on the composite, so it's happening on a much higher time frame. So if we switch this, and this is getting lengthy, I know, if we switch back to this 15-minute and we walk this forward, watch how that profile's forming. Look at that, the kurtosis, that the amount of trading that's happening at or near the high, the all-time high up there at 90.75. And then we start building the middle, and it's also building very sharply. See how this is becoming very sharp right here? Very, very odd. And then as we continue to move forward, we fill in a little bit below, but then we're back to the middle, and it's getting even sharper. And so as we get closer and closer to where we are today, we end up with something that looks kind of balanced, but it's a two-prong high volume node, right there and right there. It looks somewhat like it's got some sort of balance, but overall, it seems like there's just a lot of activity and a lot of struggling. This is saying there's a lot of discord with prices and where they are currently. And the last time I saw this, and I went back last night to look at it, the last time I remember seeing this was November, December, and into January of 2000, 1999 and 2000, and then 2000, March of 2000 was the top of the tech bubble, and we ended up rotating down. We saw this again in 2005 as well, through the summer of 2005. And at the beginning of 2006, and the market ended up correcting about a year later in 2007, with the housing market topping out in early 2006. I'm not telling you that to predict that this is going to roll over or there's going to be a crash or anything like that. I have no idea. I believe that every circumstance is unique in this market. The variables that dictate price change from year to year and from time to time. It's always the next tick, uptick or downtick, is very discrete, meaning it's very unique. It's an individual. But still, it's very, very odd. So that's something I wanted to convey. That's a lot of that. We'll go back. We'll get past that. Real quick, a review of what we've done for the month. It is the 23rd. We have about 5 or 6 more trading days, and what this month has done is this. It's moved from down here to up here and has done this. It's been stuck up here. We have not seen this again. We have not seen this sort of action for a long, long time. and that's what we've got to deal with. Just remember to check every once in a while, check the big picture so that you know what you're dealing with. This is the weekly here. We continue to build right in the middle. This looks a lot like the volume profile that I just showed you. Value is in here somewhere and outlined very clearly, but the way we're trading around that value is very, very aggressive because it just turns quiet and then it moves and then it gets quiet again. As far as what we did overnight, last night, the overnight session was quite bullish. We were quiet through the Asian session. We started to drift up. We traded mostly sideways, very light volume in the overnight session. Then Europe kicked in. Europe had some good numbers. We push up, and then we've been in a consolidation in a very balanced way up here. And you can see that there's an LVN right at yesterday's high. We are now above that gap zone. We're trading the island day from last Monday, the all-time high. And so the bulls are back on, and it looks like we're heading to new all-time highs. So this is what the overnight's showing, that there's a significant amount of strength here, and that the dividing line, there's some confluence here that you need to pay attention to with the gap zone high, yesterday's high, and the overnight LVN all in the same place. So this is an area I'm going to watch coming into today. As far as what I'm expecting for today, so under normal conditions, in a normal auction, I would say this is expected to be an open auction in out of range, and then we're looking for a rotation lower, looking for a test around 83, 84. And then we're looking for it to find buyers and to rotate up and push through all-time highs. This is actually my hypo one, because I don't care that the market is not complying with the normal auction sequence or the normal auction behavior. And so this is my primary hypothesis. This is the normal market behavior. It generally has responsive. It gets into a responsive test down, a low confidence test usually when you have a gap up against all-time highs, or in this kind of condition where it's broken out of multi-day balance. We've been stuck in this balance for multiple days. The expectation is we're looking for a hesitant push down, a test. We expect buyers to step in, and we're expecting for it to rotate and build the day's range from yesterday's high, which is also a gap zone, which is a multi-day high, which is also the overnight LVN. That's my primary hypothesis. It'll remain that way despite the fact that the market may not agree with it, because I have to follow my plan. The alternative is that we did push through the gap. This is an island top here. We're likely to have an ORR kind of open rejection reverse, and we might see a driving type of action today. The primary target becomes 93.75. There are other targets up there, but they're a lot higher. The key target becomes the 2200 figure, 2200 century number. So the secondary hypothesis is an open rejection reverse and start pushing for a test of 2200, and then potentially a push through, but not by far. I'm not expecting it to push through 2200 on the first go by much. There's a major strike price. So those are the two hypotheses for the day. Hopefully you're gaining something from this. If not, hopefully you find whatever it is you can gain from. If you have questions, you can always reach me at futurestrader71.com/contact. Good luck today. Sorry for the length of this. Take care.